Hey guys, this is Marked Out Loans here. I wanted to do something different today, so I have my guy Jay here. We're going to be talking about what's happening in the market, so tune in.
Where are you seeing your pre-approvals come in at? Meaning like price points and then also like your target areas. Like, are you getting people now versus when you first got into the mortgage game saying like, hey, like for me, like now, 400,000 is like nothing. Like a $500,000 house is nothing. Whereas like, and I say that, I don't want to say it like in a,
I mean, listen,
it's nothing, but
you're doing well.
No. Meaning like now when you go out and like you can't even find a house in Philadelphia for like under 200 grand. It doesn't need a lot of work. So how are you, I guess, maneuvering through those obstacles?
Well, it's interesting you asked that because I'm seeing the same thing. So I remember when somebody who could say, hey, I want to have a $1,200 or less mortgage payment, and they could actually get a house, in a decent neighborhood. Nowadays, if somebody's coming in as a first-time buyer and they say they want their payment to be $1,200 or less, I kind of make that face like, what neighborhood are you expecting to buy in?
Yeah.
You pretty much have to move to an area where it's coming, but it's not up. In fact, it might not.
Or it's
even
doing
be
the
coming
opposite.
yet.
It's doing the opposite. It's actually reverting back.
Exactly. So one of the things that I try to talk to people about is being mindful of the fact that this is the most expensive real estate's ever been in Philadelphia. In fact, for a lot of markets, this is the most expensive real estate's been there, period, right?
Yeah.
I have friends all over. I'm licensed in 3 states. I have clients that are looking in New Jersey and Pennsylvania and Delaware.
Is it the same?
It's the same in every market. I reached out to a young lady on Instagram the other day who's a broker down in DC. She does loans, or she sells homes in DC, Maryland, and Virginia. She said, Mark, there's less than a month's worth of inventory available right now. So one of the things that people have to be mindful of is the fact that, you may have a friend or family member that bought a house a year or 2 ago and they are at a certain price point. And you're thinking, well, hey, interest rates are lower, so I should be able to pay less than they paid. Wrong. Prices have gone up. And so one of the things that we talked about the other day that was really interesting to me that I think we got to share with people is what's happened with sales prices in just Philadelphia County over the last few years. What have you seen?
Skyrocket. Well, I think it's skyrocket because a number of things, right? Like just in general, the sales price have gone up from like about 180. At one point, you could buy like $160,000, $180,000 house in Philadelphia. Right. Now that price point has gone up to $290. It's like a cheap house actually here in Philadelphia, spending $294,000. That's the average price.
Is that like the average, or that's like the median price?
So that's the average price for homes sold from $30 million condos downtown in Liberty Place to lots sold for $1. They kind of compile all those into one list and it gives you your average price. But it's
so hold up. It went from what to what?
From about $181,000 to $294,000.
So that's like greater than a 60% increase in property sales prices
in less than 6 years.
Wow.
Less than 6-7 years.
Wow.
And I mean, it's due to a lot of things though. So it's due to for Philadelphia, we're unique in a way of we have this thing called a tax abatement. So the tax abatement was just like a huge incentive for builders, developers, flippers to go in and build new properties to increase the value of these properties and increase the value of the neighborhood around them. So that's one thing that's going on. So you have a lot of developers, a lot of builders are coming into areas like Point Breeze, where we're at now, Graduate Hospital. We're looking at spots like University City, Cobbs Creek, areas like Fishtown, Northern Liberties, Kensington, Port Richmond. These areas are pocket areas that have been heavily developed. And if you notice, all these areas are close to public transportation, and they're easy access to Center City. But all these areas have been pocket areas that has had new construction being built, where now your average home in like Fishtown is going to be somewhere like in $450,000 to $500,000, and your days on the market are going to be under 14 days on the market. So that goes to tell you the sense of urgency right there. But also, like, you have these pocket areas that have kind of driven up the price everywhere, right? So if you were in Francisville, Fairmount, Brewery Town, you were living in these areas before, like before these areas gentrified and turned over, you're kind of like, okay, where do I go, right?
And so now it's almost like a spread out effect. Like, hey, I got priced out of Fairmount, so I'm gonna go to the next neighborhood over.
Neighborhood over, yep.
I got priced out of Northern Liberty, so now I'm gonna go to the next neighborhood over, which was Fishtown.
But then you're popping, or even if you can't go, or say you were a local in that neighborhood, right? And you lived in that neighborhood and you moved, or you were renting in that neighborhood and your landlord sold your house and now it's developed and you can no longer afford to live there because not only are the sales price rising, also rents are rising up as well too, right? So, you then say, okay, well, let me go to another area. Okay, let me go to Mount Airy. Well, the problem with an area like Mount Airy has already been established, right? People have already been there. You already have people that are your mid-level executive. I mean, not mid-level executives. You have your mid-level employees, mid-managers, and things of that nature. That area's already been developed. So you may have gone from a Francisville or a Brewery Town where you were paying $1,400 in rent, and you're like, well, I'm just going to buy something. And you think you can buy Mount Airy because you don't see a lot of development going on there. But, Mount Airy is just steadily increasing. It's $400,000, $300,000 to get in. So now you're competing with people who's already been buying in this area, who already has the means to buy.
They're
established, and now you're just trying to get by to get into this area. As a first-time buyer.
Right.
And a lot of these neighborhoods that are good for families aren't first time. I mean, a lot of these neighborhoods that are good for families have a higher barrier to entry to get into.
Right.
But also,
there is no tax abatement, right?
There is no tax abatement.
If the house isn't, it wasn't in shell condition and somebody came in and rehabbed it, there's no tax abatement. So your taxes may already be at $3,000-$4,000 a year.
Yeah.
Wow.
And just the cost of these houses are causing other things to go up, right? So you kind of see the domino effect, right? So, I heard they're selling houses in South Philly for $500,000. Oh, I want to list my house and see what I can get.
Right.
I heard the market's crazy. I want to list my house and see what I can get.
And so now you have people that are selling houses that maybe have deferred maintenance because they've been living in them for 15, 20 years. And they're trying to get the same price that somebody else sold a house for that was a newly rehabbed house or new construction.
Or they're just like, hey, like my neighbor sold their house for $300,000. What can I get mine for? Right. Let me just smack it on. Can I get $330,000? Their house is pretty similar. They're not that, different. And it's just a domino effect that's causing houses to go up, to go up, to go up. But also, too, now builders are running out of spaces to develop. So now they're going into new neighborhoods. So you have neighborhoods like Allegheny West, Huntington Park, which backs up into East Falls, which has always been an established neighborhood, up and down Henry, Roxborough. It's backing up into those areas. But like Allegheny West, you can still probably buy a house for $60,000 now. But I'm pretty sure, like a rehab house you have to do for $60,000. But I'm pretty sure after a while that's
even going to change.
It's going to be because now they're building in Allegheny West.
So I think what I'm hearing from you is for somebody who's maybe a first-time buyer, they have to open up their search and get comfortable going to neighborhoods where they typically wouldn't have looked before if they want to come in at a certain price point. Otherwise, they're going to have to raise their budget. So maybe that means...
Or look for a different housing stock.
Yeah, reduce the amount of house that they're looking for or the amenities that they want to see in the house so that they can stay within their budget, or they're going to get their feelings hurt because one of the things that I know I've seen in this seller's market is prices are getting bid up over ask. And so if somebody's got a max budget of $300,000 and they actually go after a $300,000 house, they're probably going to lose that house because there's somebody who had a budget of $400,000 or $350,000 that's actually going to get that house.
And also too, you just run into it's a plethora of things, right? And then you also have buyers that just are unprepared, right?
Yeah.
I mean, meaning because this is a preparation thing, right? This is not like, buying a house.
They woke up this morning, somebody's posted on Instagram that they bought a house. They're like, oh, I got to buy a house too.
And that shit sounds like a joke, but it happens a lot. It happens a lot, and it's like, hey, I want to buy this $500,000 house. And I'm like, what do you have saved? I have $10,000 saved. I'm like, well, you don't want to buy a $500,000 house. It's just as simple as that. But you get.
It's like, wait a minute, aren't you going to lend me the money?
You know, I know you're going to go, let me the money, you know what I mean? And like, listen, like we wanted, like, I want to sell $500,000 houses all day, but I think buyers have to be realistic with what they want, right? You get people that are like, hey, I want a finished basement, I want this, I want that, but I only want to spend $150,000.
It's like, do you
know? It's not the house.
Do you know what that actually costs for real costs? Like you're starting to get into development. I know I have a lot of friends who are developers. I've seen what the scope of work looks like for contractors when you're building a house and putting it together. It's not cheap.
I was just telling my camera guy, Ian, like, hey, bro, like I just got a $70,000 bill that came through my phone as a text message from a contractor, right? And that's not even finished in the basement. That's one house. That's not even finished. And listen, and I'll show you. It says $70,000 on. Let me show you this funny.
So I can't buy that house for $150,000.
It says $70,000 in just labor.
Ooh.
So like I'm looking at $70,000 on labor, and it's going to cost me $130,000 to buy the lot. So I'm already at $200,000 already.
And then you still,
that's not a plan.
If you're planning on selling this house, I would assume you want to make a profit on
so we're probably going to list. So it's going to be the house is in Brewery Town. We have a lot of new construction going on around it.
Okay.
This is on Crossky Street in Brewery Town. And there are units behind it that are going to be new construction. It's going to sell for I think $500,000. So we're going to probably price it at $395.
Because you want to come in aggressive. Get maybe that buyer who they're comfortable going and spending a little bit more, but they don't necessarily want to kick out the premium for new construction.
Yeah.
But having a newly rehabbed home,
yep,
they're going to be excited to be in that neighborhood, and they know that the neighbors around them are working professionals. They can afford $500,000 houses. Yep. So it's a neighborhood that they want to live in.
And getting in at $395, you're kind of almost getting in at the beginning too, because you have Brewery Town. Town Temple is just continuing to build.
It's going to continue to go up in value.
And there's about 13 projects just in that immediate area, like in like a 3-block range that's going on.
That's
from
nice.
Individual homes to like multiple construction sites and things of that nature. So. But to go back to the question is that you sit there and you ask people, you're like, relatively speaking, like, do you know how much it costs to finish a basement?
Right.
$20,000, $30,000. It's $10,000 to dig it out and give you the head clearance that you need.
Right.
So, agents have to set the expectations a whole lot.
About what that looks like, right?
What $150,000 look like?
If I want to finish basement, what does that look like? If I want to have a new construction house, what does that look like? If I want to have a house that's fully rehabbed, what's the premium on that? Cost of labor went up because supply chains were interrupted during COVID. Those costs are being passed on to end buyers, right? The contractor or the developer is not saying, oh, well, my expenses went up. I guess I'll just make less money. They're just going to pass those costs on to the end consumer. So what I'm hearing
the market is, it sustains it. The way the market is going, you can up your price.
People are willing to pay it. So what I'm hearing is for people who are coming into the market as first-time buyers, you have to do a real, budget for what you can afford, what's feasible based on what's available in the market. Have your savings ready to go. Have your financing lined up before you even go out and start looking at houses. Otherwise, you're probably going to get your feelings hurt. Or you're going to spend a lot of time looking at houses that you can't buy.
And you're going to get your feelings hurt.
And eventually your agent's probably going to fire you. So
or we're just going to stop sending you shit and we just stop answering our phone. Right. And I always tell people, like, listen, if you're thinking about it, if today you woke up and thought about buying a house, give yourself 12 to 18 months preparation time for debt reduction.
To actually prepare.
For debt reduction. And for savings, because I tell people, for me, I almost spent like $20,000 to buy my house. That wasn't my closing cost. My closing cost was like $10,000. They're like, well, why did you spend $20,000? Because I had to pay my car off. Then I had to pay some other loans and stuff off. So these are things that you don't know
to get yourself credit ready.
To get myself credit ready to be able, well, the crazy part about it is I was credit ready, and I was looking at a house that was higher at first. So. And when I looked at that higher price point, in order for me to get to that next level, I had to pay off a car loan, and I had to pay off some other debt in the back end. And that's people don't look at that as a closing cost, but that's a closing cost. Because if you're telling me I can't get this house until I pay my car off, that's you might as well put on the fucking line item, right?
Yeah, that's one of the the secret conversations in mortgage applications and mortgage underwriting is. We will talk about the 4 C's of mortgage underwriting. Your capacity to repay the loan is really the most important. It's more important than your credit score in some cases because it goes without saying, if I'm trying to buy a house or apply for any type of loan, I need to show that I have a history of borrowing money and paying it back on time. That's a given. Now, depending on the type of financing you're trying to get, you may need a certain credit score, but what really determines whether or not you can afford a house is your capacity to repay the loan and being able to document that. So if I can't show I have enough income to support my mortgage plus the other debts that show up on my credit report, then I can't buy a house. It doesn't matter what my credit score is. I have people who have 800 credit scores who can't afford the house that they want because they don't show enough income or they show too much debt. So one of the conversations that people have to have with themselves is, what is their budget? Is that budget realistic based on the neighborhood that they want to live in, the amount of house that they want to buy, and then sitting down with a mortgage professional and determining whether or not they can actually afford that amount of house. And if those two things don't line up, then you're not ready, and that's okay. In a year or two, you may be ready. It took me 2 years to get ready for the loan process, and I help people buy houses for a living.
Me too, and I help people buy houses for a living. Like,
it's one of those conversations that I feel like not enough agents have with clients because they're so eager to just get them out looking at a house so they can get a commission. But the reality is, if you force somebody, square peg in a round hole to buy a house when they're not really ready, and you're almost doing them a disservice because now they're house poor most likely. They don't even have enough money to buy furniture. Like, if you ever go into anybody's house 6 months after they moved in and they still don't have furniture?
I'm like that.
I
have the money to buy, I just don't like furniture.
That's because you're a workaholic. And, I know that life because I'm the same way.
It's like a couch and a desk.
It's like, hey, as long as I can sit down and watch Netflix at night before I pass out and I got a place to sit down and do work, I'm good. But in all seriousness, if you have a family, there's costs associated with buying a house and moving that have nothing to do with transfer tax, title fees, escrows, down payment. Hey, I have to move my life from one place to another. That costs money. We have to furnish this house. Maybe the kids we're setting up a bedroom because we now have separate bedrooms for the kids. They got to get furniture for their rooms. If you don't have that into your budget too, now you just moved into a house and everybody's just sitting on the floor cross-legged. It's weird.
It's the old analogy, like you may be able to afford the payment for the Bentley, but can you afford the brakes?
Can you
can you get the oil change? Can you get the maintenance? And but even the other expenses, like I'll give 2 examples of being, why being prepared is so important. I worked on a deal, and someone, they had lost their job, and no, they didn't lose their job. They weren't ready, and they couldn't get approved for the loan. And typically with a mortgage contingency, you'll get your deposit back. But there were some things that where we forgoed that. They thought they were going to be able to go ahead and do that. So they
how much was the deposit that they put up?
Deposit was only $3,500.
Okay,
which was good. It was only a house for $180,000, but they lost a good portion of their deposit. They got back $2,000 of their deposit.
And I would imagine, not speaking.
And that was a heavy negotiation to get that $2,000 back.
Not speaking on their lives, but I mean, if you're buying a $180,000 house, this isn't like shade, but like you probably didn't have oodles and oodles of money. You're not sitting with $100,000 in the bank. So for me, if I had to give up $2,000 for a house that I didn't buy, I would be upset.
Yeah, you'd be pissed.
But I mean, thankfully, I'm in a business where we're doing well.
But it's preparation in time. Like you need to know, like, hey, can I do that? But even giving another example where you and I know it, where you and I are dealing with a client, and like if their DTI was $300 less, they could probably afford $50,000 more of a home, and it'll become a whole other thing. And like
so that maybe goes back to like when people take on unnecessary liabilities, like getting the nice car before they buy their house. Maybe
financing their clothes.
Running
through credit cards.
Running
that's all you're doing is financing your
bill,
clothes.
right? It's like, hey, I got my drip, but I don't have a place to lay my head. I don't
have
own.
a place to hang my drip.
I
got my drip, but I have no closet to fit the fucking drip in.
I have a place for that. So that's
common though.
That's a conversation to have with people. Even as a real estate professional, is hey. One of the things that I always recommend for real estate agents, the first thing you should be asking the person is, what's your budget? What neighborhood do you want to live in? If somebody says, hey, I want to live in Drexel Hill and I won't want to pay more than $1,000 a month, that's an immediate red flag for you as a
because one in taxes are about $7,000 a year, so that's $600 a month in taxes.
Automatically. So it's like, hey, or if you're going to be positioning yourself in whatever your local market is, as a local real estate expert, you have to be really engaged on what the cost of money is if somebody's borrowing money at that time. Just in the last, heck, 30 days, we've probably seen mortgage interest rates move up about, depending on the type of loan that you're getting, between 500 and 750 basis points.
Okay.
That means that if I qualified for a 2.75% interest rate a month ago, my rate may be in the mid threes now.
Yeah.
That's a big deal,
It's a
right?
big jump.
That affects your buying power. If I'm getting a house of a certain amount, that means that now that house costs more money. Maybe if I was already at the edge of my buying power as far as my affordability on paper,
it kind of messes
I
you
priced
up.
myself, I'm out of that market. I can't afford that house unless I'm coming with a considerable chunk for my down payment, or I'm willing to pay discount points to buy down my interest rate, whatever that looks like.
There's a ton of other expenses too. Not to cut you off, that I think agents should definitely prepare their buyers with. I always prepare my buyers. Look, aside from the closing costs, look to spend like another $2,000 throughout this process, and that's like $1,000. Listen, your base home inspection is going to be like $600, and that's for radon home inspection and termite. But I tell everyone, even if it's new construction, older homes in Philadelphia, we run terracotta piping. Get a sewer line. That's another $300. So that's $900 for inspection. If it's a stucco home, especially if it's stucco built after 1940.
Wow.
If it's built before 1940, you're good. Because a lot of it's masonry and it breathes. But if it's stucco on wood, a lot of these guys don't know how to install stucco. There's a ton of new construction
and so there'll
homes.
be rot behind the stucco if it's not properly installed. Okay.
That's another $945. If you're buying somewhere in a county and you don't have public sewer, you got to get a septic inspection. These are things that you want to communicate with your buyers when you're talking to them in the beginning. That way they know and they're not surprised. I mean, I know some agents who don't even inform their buyers about their appraisal, and they come back like, "What's this $800 appraisal?" And I'm like,
you have to get an appraisal so that you can get a
so there's our other expenses that kind of run that kind of runs into it that you just want to be heads up with them at first and kind of let them know. But also there are things, again, going back to the preparation stage, that you just want to lay out ahead of time. That way there's no like.
So is it fair to say this, that your job as a real estate agent, my job as a loan professional, it's not to necessarily turn renters into buyers. No. It's to take people who are ready to buy a house and then guide them through the process. Make sure that they're, seeing around corners, avoiding pitfalls, not missing out on the house that they want because, we're not preparing them when they start to go into the market. But if somebody is not ready to buy a house, making sure that we're also educating them on what they need to do to prepare for the process, letting them go through that process, and then being able to assist them.
I would say
I can't make you a homeowner if you don't have money saved, you can't show that you have income to support the payment, or you have bad credit history because you've been irresponsible with using your credit. You've got to work on those things. Then I can show you, hey, these are what your options are for buying your house, and then 100%. Jay can help you find a house. So that's something that a conversation that I really wanted to have, because we always have these conversations, but I see some of the things on social media that are really alarming to me. Is people are like,
don't listen to social media.
Hey,
contact
you can buy a house, you don't need money, you just get a loan. If you could say that you got a job, you can get a loan. You're good. You don't need money for a down payment, or you only need 3%. And I'm like, hey, in theory, is that true? Yes. In theory, I could get an FHA loan with a 3.5% down payment and get 6% seller assist. But the reality is, in this market, we've already seen FHA offers are almost looked at as ugh.
See, you want to do this for people, and I tell people this. And so I would say 80% of my job, 80% of our job is 80 to 85% is managing expectations.
Ooh, yeah.
Right?
Yeah.
Managing expectations, being real. Because sometimes lying in this business, or tagging someone along when you know they can't buy a house, is only going to, one, waste your time. You're not going to get money, right? And there's some agents who don't know how to. It's like the breakup thing, right? They don't know how to break up. They don't know how to say, like, hey, no, it's serious. They don't know how to say, hey, you
have
can't
those difficult conversations.
You can't afford a house right now because there's here's the thing. If someone couldn't buy a house with you and they say, well, screw you, I'm going to go with another agent, they can't buy a house with that agent either. Right? So at some point you have to be honest, and it may hurt when you have that first conversation. But that client, even if they say screw you and talk to someone else, and they get their, because I had someone do that as well to me, and they got their foot kicked in their ass, and they came back and it was like, you was right about what you said. So you went through the process 2 times just to get let down twice. But it's managing expectations, and I think the other thing is, providing information that's part of that. That's part of 80%.
I always tell agents this who are newer. I say, look, if somebody's unwilling to work with you the way that you want to work with them, and they're not going to listen to your advice,
It's gonna be a headache.
you get the same commission from a client who's hard-headed and won't listen to you and doesn't close in the house as you do from a client that you fire because they're hard-headed and they won't listen to you, right?
Yep.
I get the same loan commission. If somebody doesn't listen to my advice and then they don't get the house, versus if they don't listen to my advice and I say, hey, you know what, I can't really help you out, I get the same commission either way because the net result is they're not buying a house. I'm not able to help them, you're not able to help them. And in fact, I actually lost money in that first scenario because I could have been spending time with somebody who was listening to my advice and we would have made it to the closing table.
And it makes the experience a whole lot better too.
Oh,
it makes the experience a lot better for everyone.
And then now they feel comfortable telling their friends and family, oh my gosh, I bought a house, it was awesome.
And the biggest thing, and I guess, the biggest thing to tell buyers, and that kind of correlates with we manage expectations 80% of the time, is that managing those expectations is also managing the expectations for closing, right? And managing expectations for document prep. Like the biggest thing that screw people over is document preparation, right? Like how do you not know where to find your taxes at? Right? You filed them like I don't have my W-2. I can't find it.
I had a conversation yesterday with a guy. He was like super nice. He's like, hey, I got everything ready to go.
Because it's not hard to buy a house.
Yeah. He's like, I got everything ready to go. I got my money saved, my credits. I've been working on it. I work at my job. I make good money. I was like, oh, that's awesome. I got off the phone with him. I sent his real estate agent a text message like, hey, great client. He's going to file the application. And then he starts filling out the application and he goes, hey, you guys need my tax returns for the last 2 years? I haven't filed my taxes for the last 2 years. I was like, well, you should probably get on that.
Small business owners, file your taxes. I know we like to file a loss, but you can't buy a house if you run a business that makes $100,000, but you only profit $10,000. Would you tell them that, Mark? Can you tell small business owners? Like,
we got some more resources coming in the future too for self-employed business owners.
We should do that,
Because one of the things that a lot of people don't know about is that there are loan options that are available where if you are making money in your business, but maybe your business also has a lot of expenses and you're reporting less income than what you're grossing, and that's what you're paying taxes on, we can only finance your house based on the income that you pay taxes on. So if someone's a W-2 employee and they make $100,000 a year, they pay taxes on $100,000. So we're able to use $100,000 to qualify them for the loan. If you have a business that grosses $100,000 and then you claim $60,000 in expenses and your business's net income is $40,000, you pay taxes on $40,000. So that's what we're allowed to use to qualify you for the loan. We can only use that $40,000. So for a lot of people, they either don't know that because when you file for your LLC, nobody tells you that. Their accountant doesn't discuss it with them. And then they go through the whole process of saving money.
Or YouTube University doesn't tell them.
YouTube University says, oh, you can start an LLC.
Write off everything.
Yeah, write off everything and you lower your taxable income. And that's true. The tax code does benefit business owners.
In that way.
But the bank or the mortgage company doesn't care because we have to go by the rules of Fannie Mae, Freddie Mac, FHA, VA, if you're a veteran, right? And Fannie and Freddie, they don't care about, lowering your taxable income. They care about showing your ability to repay. And so if Fannie and Freddie say it's a no-go, then it's a no-go. But there are some non-qualified mortgage options that are not conventional loans, not FHA or VA government loans, that you can actually use the gross income from your business to qualify for a loan. They are slightly more expensive. They're a little bit more cash intensive, but for some of my business owner clients, those options make more sense. Those options make more sense because, somebody has the option of either paying more money for taxes so that they can report enough income so they can qualify for conventional financing. They may take on a tax bill that, makes them sick. But if they say, hey, my business is grossing good income, my credit's in great shape, I've got some money saved, I don't mind making a bigger down payment and having a slightly higher interest rate, but I'm reducing my taxable income because I'm still able to claim all of my expenses. So that's one of the things that we're going to be talking about going forward because one of the things that I found out recently that blew my mind, and I know this, I guess, from talking to people, but I've worked with a lot of veterans. My brother's in the Marine Corps. I have friends who are in real estate that are in military or were in the military, and they are eligible for VA financing. There's actually more small business owners who want to buy houses than there are veterans that want to buy houses. So that's an underserved
I mean, if you look at it,
demographic.
like 40, I think it's 44 or 46% of the American workforce is actually
employed by small businesses.
It's gig
Right.
work. No, it's they either gig workers or self-employed themselves.
Just period. Oh,
period.
Okay.
So
listen,
that's
this
a huge.
This is coming from somebody who used to work in business financing. So you gotta understand that when you're working with professionals, everything that they did prior to that is going to come into play. So having a real estate professional like Jay, who understands insurance because he's a licensed insurance agent, understands how business owners run their businesses and report their income because he did financing for businesses, for small businesses for years, understanding the local real estate market because he's actively developing properties in the area. He's constantly looking for deals for himself, so he's able to evaluate a project, and he could also point out things in a property that maybe an agent who just does this part-time might be like, oh, hey, the house looks great. And Jay will come through and say, you know what? I know that that's not good work. That's going to be an issue for you in the future. I don't even have to wait for the home inspector. I'm going to see that. So
And
you
don't
want
get
to
a
work with
part-time
competent
agent.
professionals.
Yeah, don't
You
get a
gotta work with
part-time.
competent professionals. I mean, I know some part-time agents that are super competent, but
you know what?
you got to be mindful of like what their training and what their support is, right?
This
So
is
if
what
you
I say
gotta-
to people: don't be. So this is my only knock on part-time agents and like part-time mortgage brokers. Anything that's part-time is because
Yeah, if you're a part-time mortgage professional, I can't trust
I
you.
need you to close. Like if you're a part-time agent, I need you to close during business hours.
Right. That's
Like
facts.
I need you to
That's
close,
facts.
or like
That's
I
facts.
need to.
How
Like,
are you? Yeah, how am I gonna get a hold of you?
If you can't, if your
Like,
agent
I
can't
call you
answer
back
the
on my lunch
phone,
break.
I'm at lunch. But as the mortgage broker, I'm pretty sure as a mortgage broker, you like,
Right.
I need you now.
Right,
Like, you know what I
right,
mean?
right.
Or
That's
you need to
fair.
go here, you need
That's
to call
fair.
there, and things of that
That's
nature.
fair.
You can get fired
So-
from your job for company time.
So if you're gonna be, I think if you're gonna be working with someone who is a part-time agent, you got to know that they have a support team.
Yeah.
That there's always somebody working for you, and that's not all. Not all real estate agents are created equal. Not all mortgage professionals are created equal. Not all part-time agents. I know some part-time agents who are more competent than agents who've been selling houses for 10 years. But it just comes down to also what are the resources that they have to support you as a client, because at the end of the day, even though I only make money when somebody's actually able to buy a house, I work for them. If they say, hey, Mark sucks and I don't want to work with them and I'm not going to refer many of my friends and family, I don't make any money. My business isn't growing. Same thing for you. So you want to have somebody
That's
that
key.
you feel comfortable that they're going to be coaching you and guiding you through the biggest purchase of your life, most likely, but then also at the end of it, you feel comfortable referring them to your mom, your sister, your brother, your uncle. So when you're going out into the market, it's not just about, hey, who's the person that has the sexiest videos on Instagram, or who's the person that which company has the lowest advertised mortgage rates, right? One of the things that I've seen is they'll go with a lot of these online lenders, and then you get to the service and it's not there.
Crappy, it's crappy.
They'll go to the bank that
Guarantee
has
rate,
ads,
crappy.
popping up on their Facebook page, but then they
good
can't
to-
get a hold of their mortgage professional at 5:05. I've had people that I talked to, and then they went with another lender, and then they called me up to ask me questions, and I'm like, hey man, this
can't do
sounds
it.
like a really good question for your mortgage person.
Program, yeah. No, and that's real, and that goes to show discount isn't better with everything.
Ooh.
Right? You know what I mean? Discounts are
Especially
good, but
maybe
not-
the biggest purchase of your
your
life,
life, right?
Right? I don't drive a Kia. No knock on anybody that does, but I don't drive a Kia. There's a reason for that. I don't want the cheapest thing that's available.
Yeah.
I want, I'm not blowing out of control yet. I can't afford the Aston Martin, but I want to be able to have that balance, right? If I have an issue, I called my dealership up the other day when I had a check engine light come on. They were like, Mark, bring the car in. Boom.
Service. It's all
Drop it
about
off,
service,
right?
yeah.
So it's like I have that nice mix. Now, that payment doesn't break my bank each month, but I know that if I call, I can get that service. So you have to figure out what's most important to you as a consumer.
Yeah, and
is it cheap and low service?
Service, yeah.
Or is it, hey, I'm gonna maybe pay a premium and I have to work with somebody, I have opportunity to work with somebody where I can actually get them on the phone. They can answer my questions. Working with them is the reason why I win my house in the market.
Yeah.
Right? I've had people who their offers were accepted because of me.
Yeah.
That's not me feeling myself. Literally, I knew the listing agent or the listing
Small
agent knew
community.
me. They, everybody knows everybody.
We work
in real
with
estate.
each other.
Right, all the
Because
time.
Although it's like 4,000 agents in PA,
Right.
probably like 1,000 really actively work.
Right.
You know what I mean?
Right.
Like really actively get in. And you get people
You
that
see
have
the
their
same names over and over again.
You get some people that have their license to help mom or grandma buy
Right.
a house and stuff like that. But the ones that are actively busting ass in the business, you see them all the time.
Right.
And I would just tell buyers, I would kind of end it on this note, just tell buyers, one of the best things, one of the things to do when you're, I guess, looking for a realtor or hiring a realtor, ask these 3 questions. Ask what their tool belt looks like. When I say what their tool belt looks like, who do you work with for inspections, right? If they don't have a person for inspection, they're like, oh, just call an inspector, red flag. Who do you work with for a title company, right? Do they have 2-3 title people on hand? I have a title company that runs my regular deals. I have one that runs my hard money deals with investors that I'm working with because they need fast turnaround, 14 days. This company is able to get it in and out in 14 days, do the search. And I also have title company. I also have a title company, and I apologize for it that I just call when it's a fucking crunch. They probably get 2 or 3 deals out of mine per year, but hey, they get that, right? Just because I need them to do it because one title company.
You put the pressure on them, right?
You put the pressure on them. Lenders, make sure you have someone who's working with a lender that's competent. Someone who can say you send them to your lender, they're like, hey, I don't only have these products, but I'm well versed and well knowledge that I can tell you, okay, your situation fits with this product over here, or maybe I can't service you, but I know an avenue or someone
they're the plug.
Yeah, there's a plug. There's a guy for that.
Right.
So lender, title, and even insurance rep. Make sure they understand the insurance process, and they have someone. I mean, most people call their car insurance, but
Maybe you're buying in a city like Philly where, not all insurance companies like Philly row homes.
That's not all insurance companies like Philly row homes. Some insurance companies won't insure houses that are built before 1940. Some insurance companies offer certain things. Some don't offer certain things. So you want to make sure you get to a professional on those, or your agent knows people that they can say, hey, boom, 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 boom. I need a moving company. Because the whole thing, and my whole motto is, when buying a house, I work with a lot of first-time home buyers. I want this process to be as streamlined as possible. Right? I don't want any hiccups. I don't want any. I want you to feel like, oh shit, I bought a house.
Right.
Fuck, closings today.
Right.
I want it to be like when you wake up and you
and not just first-time buyers. I have clients that they may be getting a house and they're moving, and they could be empty nesters.
Yeah.
They could be looking to relocate because somebody got a job somewhere. And it might be their first time buying a house in 10 or 15 years.
Yeah.
The loan process is dramatically different. I mean, we don't even use the same loan application that we used 10 years ago. So just think about that. Everything's e-signed. Like literally the information that we have to collect is different.
Yeah.
The information that we have to collect from clients and the verifications that we have to make are completely different from even 7 or 8 years ago because of what happened in the crash back in 08, 09. So you want to make sure that you're working with people who are doing a significant amount of business in this market. They have local professionals that they can lean on for their resources, and that they actually are somebody that you want to deal with for the next month or 3 while you look for a house.
That's the most understated. And I'm just gonna press on that one more time. It's so key, your realtor's tool belt, because and it's key for your and if you're a realtor watching this, building your tool belt up is important for you, because what that allows you to do is, and I always use this scenario, it allows me to take a client 2 weeks, 3 weeks, we look for houses, we get under contract. Now I can alley hoop them to Mark. Mark's gonna take care of them, right? I've prepped them. They've already given their documents and things to Mark, and because truth be told, once you go under contract and we see the inspection and we go through the second negotiations from getting repairs, he's going to deal with you. I get the bigger split, but he's going to do all the work.
That's
fucked up too. He's going to do all the work. He's going to do all the work. I feel for you, my fault, bro.
Hey, lunch on you next time.
You got it. but that's how we work as realtors. Like, because honestly, once I get you under contract, I'm alley hooping at the mark. His team's on that. His process.
My
and
processor's
he's talking shit because his processor probably does more work than him. He's alley hooping it to his processor, right? But they even on your title side too, like, because their title may do more work than all of us, actually, because your title, they're looking for everything, and those things are important. Like, you're gonna talk to this guy after you speak to me. Probably you guys are gonna be buddies. He's gonna irritate you. He's gonna call you for documents. He may even call you up until the fucking day you close for documents, right?
Yeah, I'm gonna ask you some really personal questions. Right?
And it's key, and even when you ask him, because through the pandemic, and I'm pretty sure you can piggyback on this, there were underwriters, like, this is real shit, and I had it happen to me. There were times with mortgage companies, bro, underwriters just fucking quit. During the pandemic, because they were so overwhelmed with refis and things of that nature. And you gotta say that, picking the right team or having someone that can say, all right, I'm gonna get you over here to this lender because now a processor quit, a closer quit over there at this. And you may say, oh, well, one closer quit, what does that matter? But
what if that person was a powerhouse and they were
closer and they had like 50 deals to fund?
50 deals a month.
You know?
I actually had that happen at my old company. Prior to the
fucks shit up.
Prior to COVID, my processor had like a personal tragedy, and then was working from home with a young kid. Her husband was an essential worker, so she's like turned into not a stay-at-home mom, but kind of, but then also still working full time. And we got our loan volume tripled overnight. And so she just got burnt up, she tapped out. And when she left, everybody who was working with her in my office, we were negatively affected. Our clients, weren't getting that service level. We had to bring somebody else in. They were overwhelmed. They ended up getting fired. They had to bring somebody else in. They were brand new. And so we got to the point where, for me, I was looking at the service level that my clients were receiving. I was like, hey, this is unacceptable. Crazy. I gotta peace out. And so that's one of the things that you have to be mindful of is a lot of companies are experiencing this still because we haven't caught back up. Inventory is still lacking, and there's still way more people.
And it's not only new purchases, it's refis. That's too.
Right.
So
even though rates have jumped up, rates are still lower right now than they were at the end of 2019.
There's a lot of activity going on in the market.
Yep. So
there's a lot of things going, like you say, your processor. And for people who don't know, I know because I've worked in finance and I've worked in insurance, for those people that's in those finance positions, those processors, there's no 2-week process. You have to stop right there as soon as you give your deadline because you're working with people financial information. They don't want you to collect data. No, they don't. So
hey, well, while you're on your way out the door, here's access to all of our clients' personal financial information.
So it stops right then and there. So you, as a consumer, you need to think oh shit, no one else knows what's going on. Everyone stops.
We're starting from scratch. Yeah.
So
so it's important to work with.
Mark doesn't know I quit as the processor. He's like,
It's important to work with a team where there's a continuity of the business. There are multiple people that are responsible for making sure that your file gets to settlement, and they're shepherding that process. I've seen scenarios where I had people call me up and say, hey, my loan officer's sick. I haven't heard from them in 2 weeks.
What about his assistant?
I need help buying a house. I've been under contract for a month.
Seriously?
I haven't heard from my loan officer in 2 weeks. I just found out they're sick in the hospital. What should I do? I'm like, wait, what do you mean? Who else is working on your file? They're like, no, I don't know. I'm out here in the world. So that's one of the things that you want to be mindful of is, there's a reason why, someone like Jay works with me and refers me clients. It's not just because we're both bald-headed people. Here, bro. I would think that makes our friendship stronger.
We're ahead by
option. Sounds good. I would think that makes our friendship stronger, but the reality is he knows that, for one, I'm accountable to him, right? We know each other in real life. So if I drop the ball, it's going to affect him negatively financially. I don't want that to happen because that's going to affect the way he feels about me. If your friend came to your house and took money out your wallet over and over again, eventually you'd be like, hey man, what's going on? We got to have a talk, right? So I'm responsible to him because it's financially in his best interest and in my best interest for the transaction to close. But if you're dealing with somebody who works in a call center or
You're just a number.
They're somebody that sits at a desk in a bank branch, the reality is they're getting paid no matter what.
Yep.
And so if your loan doesn't close, they're not that emotional about it. And even more so, there's nobody on the other side of the transaction that they have to be accountable to.
Yep.
And so now, guess what? Hey, sorry, I know we didn't get back to you.
Whatever. I'm gonna make 80 grand this year anyway. Like, you know what I mean? Like, who cares? And that's what they talk.
I'm gonna make the same check, and
Yep.
that.
And that's how it is.
That's the reality. That's why typically.
This is when hunger and greed actually is good.
Right.
Where someone like, he doesn't eat if this doesn't close. So I'm gonna be as creative as fucking possible to get
But then
this
not
thing
just
going.
that. Not only do I not make any money on that transaction, but then I lose out on future transactions because you're gonna be looking at me like, yo, Mark, I can't get jiggy with this. You dropped the ball. My clients homeless. They had to renew their lease and pay more. I didn't get the commission. I had that money. I had some plans for that money. We were going
spent it already.
Yeah, we were about to pick up another property. I can't do that now. So you want to work with people who are accountable to the other people in the transaction. Jay doesn't make any extra money from me doing a loan, but it's insurance for him making his money. Yeah. So it's in his best interest to work with me and to have clients work with me.
And it's just gonna be real though too, right?
Yeah.
It's just a real factor where like if I call him like, yo, can we do this? No. All right, cool. I don't even waste time.
You don't want to. You don't want to be spinning your wheels, going out
something.
looking at houses, and then you go under contract, you get an offer accepted, and then you find out 2 or 3 weeks into the process, oh yeah, by the way, we didn't vet your information up front. You can't actually buy this house, and now you're sitting there like, huh? So it's super important that you work with local real estate professionals, ideally local mortgage professionals.
That's key. Local, I can't drum that down. Please drum it down. It's
local real estate professional, local mortgage professionals. They know the market. They have a reputation in the market.
That's your offer too.
It's gonna make your offer look stronger when you submit it. And then now, there's already a lot of challenges right now in a seller's market. You don't want to add extra challenges on top by
how many times
working with an incompetent agent. Yeah,
a listing agent calls you a lot, probably, right?
Yeah,
that's like, hey,
they're like, hey, is this person good to go? Is this person good to go? And if
probably more than often, probably more than not, listing agents gonna call. Like,
I've had some listing agents ask me information that I'm not even allowed to reveal. They're like, hey, what's their credit score? What's their debt to income ratio? How long have they been there at their job? I'm like, first of all, you have the buyer's financial information sheet. I know you know the answer to some of these questions. The rest of the questions you're asking me are inappropriate. And I've had agents tell me, yeah, I know, I just have to, I have to get as much information as possible for my client because they're weighing multiple offers. And they need to know whether or not this is the person because they're leaning towards them. I want to make sure that we're going to make it to closing. Mark, are we going to make it to closing? And that's the number one thing that a listing agent wants to know. That's the number one thing that a seller wants to know. Are you going to be able to make it to closing on time? Because just like, Jay has plans for his commissions, I got plans for my commissions. The listing agent has plans for their commissions. That seller has plans for the money that they're going to get from selling that house. They don't want to take their house off the market and go under contract with you and then you not make it to the settlement table. That's like almost the worst thing that could happen.
And sometimes I've had situations like this where, I've been on both ends of the transaction working with the same person where they're selling their house to buy a house where, sometimes it's like,
it's a whole daisy chain.
Like,
and then maybe,
because then someone else is
maybe the house, the next house,
it's a triple effect. Right. It's like, oh, you can't close on my house.
You have one delay and now 3 people can't close in their house. Yeah. That's the worst.
Because the house I want to buy, and you can't close on my house, so I can't get that money to buy the house from Mark. Right. Mark was going to take that money to buy somewhere else.
Another house. So somebody else was getting that money to buy a house in another part of the country.
And it's a bad thing, but also too, even as a seller, and I always tell people this, like, think of yourself as a seller.
Right.
If I take this house off the market, the typical process is 30 to 45 days. If I take this house off the market and it comes back on 45 days later, people never say, and this is one thing as buyers, people never say, oh, did the buyer financing fall through? People walk into a house
they assume
that was under contract,
right,
that came back on the market and said, what's wrong? And the radars go up. So as a seller, they're weighing that offer a lot.
Right.
Because the second time, a first impression is always the best impression.
Oh,
the second time is best. The second time on the market, no matter how many times I tell you, oh, it was due to buyer financing.
Nobody,
everybody
I'm sure
say
it was.
that.
Right.
Yup, let me see. Let me see this.
Was there something that came up on the home inspection?
The house could be dry as hell, and someone's like, I think I smell water.
No,
like, no, you don't. Like, you know what I mean? Like,
Yeah.
But you go in thinking like,
Yeah.
hey, it was something wrong with this. This is a still product. I don't want that.
Yeah. So you got to be mindful of all that when you're entering this market. And I mean, it's not just now, but
Every
I think
time.
all of these things are like accentuated and exacerbated in the seller's market because sellers have to be a little bit more choosy. There's obviously way more people competing for the inventory. That, you know, right now demand is completely outstripping supply, and that's why you're seeing these price points hop up. So, you know, we're having these conversations and recording it because we want to make sure that people know what's going on in the market and you're operating so that you can really win the house that you want.
Preparation.
So, any questions that you guys have, I want you to feel comfortable putting them in the comments. We're gonna have this up on YouTube. I want you guys to put this in the comments, and then Jay and I will go in there and answer the questions because we want to be a resource for you. Don't be afraid to ask a question if you think it's a stupid question. Even if it is, I'm going to answer it anyway because I have to because I just put it on camera. So I want you guys to.
I'm going to give you my IG to put it in there too. The IG to put on like the bio. That way
we'll put it on there.
They can DM me directly.
DM us on Instagram or put the comment on under the YouTube channel or under the YouTube video, and then what we're going to do is keep giving you guys resources because we're in the market right now. So it's actually unfolding as we're experiencing it, right? A month from now, things may be different. 2 months from now, they may be different. 30 days or 3 months from now, they may be different. So as we see the changes in the market, we're going to be giving you guys that information. So this is Mark.Loans. I'm here with Jay Edwards from OCF Realty. And I was glad you guys had a chance to come in and just get a peek inside our brains. We're going to keep the information coming.
And buy this $700,000 house. I got something to do with that 40 grand commission. No, actually 80 grand. Because we get double.